One of the deals that I started with in 1989 was RJR Nabisco, and that was a $30 billion leverage buyout. It took 20 plus years to get to that again with HCA, a deal that myself and my colleagues had worked on at Merrill Lynch. And I think it's interesting that it took 20 years to get back to a mega deal, but it does demonstrate that, number one, private equity has been a huge force in M&A over the years. It's become developed, it's matured, it's sizable, it's global. I think when you look at the private equity firms and the evolution of those firms as not just private equity investors, but asset managers, and what has been a recent trend to raise permanent capital, go public, as we've seen of Blackstone, recently KKR on the hedge fund side, an OXIF, an Oaktree, potential IPO candidates, Carlyle and Apollo. I think they've become mature asset managers. They work across different asset classes. Private equity is a large one. And I think that's been an important development for those firms, particularly in terms of size and scale. I don't know that it's changed the nature of the M&A market. I think it's changed the nature of the asset management business, and they're really the forerunners in those businesses that will drive changes going forward. And I think the other thing that would be most reflective of changes in the course of 20 years is the global nature of the capital markets business and really the M&A business. It used to be a business where we would focus largely on America's deals, domestic consolidation, some private equity activity. Today, as we've seen the emergence of Europe as a major M&A force, both corporate and private equity. If you look at emerging markets, now we have the BRIC countries. BRIC was never an acronym we had used in the 80s or the 90s. I think the future will be the drive from some of these emerging markets to be the big acquirers and consolidators in the coming 10 years.